Good morning. This is Axel Merk, President and Chief Investment Officer of Merk Investments, with my Monday morning update, a risk-on feel to the markets here after there is a vaccine from a company called Moderna showing some promise, and so glass was half empty last week, and now it is half full. Mentioned the company name here, so let me get my disclosure here right out of the way. This is not investment recommendation for anything or anybody. Um, and so glass is half full today, and you also had other things come out. For example, that the Bundesbank came out with a positive assessment, suggesting Germany is recovering. You have the DAX is up 4.4% right now as I speak. The Euro Stoxx is up 4%. The FTSE is up 3.5%. The Canadian market is closed, by the way, today. The S&P futures are currently up 85, and the Dow is up 720 points. Not exactly at the high anymore, but things are quote unquote good. The dollar is weak on that backdrop, with the strongest currency being the New Zealand dollar, up 1.3% right now. The NOK and the Australian dollar also each up over 1%. The yen is slightly down. The Swiss franc is kind of flattish to tad up. Gold is weak on this, was strong earlier today before that announcement came out, but right now gold is down 8 points, about 0.5%, and S&P futures are down $18. So the spot price of gold is at 1736 right now. Bonds are weaker. The 10-year is down 12 ticks. The long bond is down a full point and 11 ticks. The 3-month T-bill is at 11 basis points. The 3-month LIBOR is at 38. And so for those who've been following me, I've been mentioning the 3-month LIBOR here. LIBOR historically in a quote unquote normal environment is about 25 basis points above the T-bill rate. And so if you do the math, you come up to 36, and we are at 38. So we're back to a more normal sort of environment for 3-month LIBOR. And the Fed funds effective rate is at 5 basis points. Yes, so is everything great and so forth? There are signs that things are normalizing in some places in the world. In Switzerland, for example, restaurants have opened up, some social distancing in shops have opened up. There's a limit, there's a number of people in the shops, but you don't have to wear a mask in most of them. Some stores require it, but it's the store and not the government, it's my understanding, that requires them, and then they hand out masks for folks heading into these shops. In Europe, Germany announced that they will allow intra-European travel inside the EU, and so that's opening up as well. And then, of course, the governments are continuing to think about ways of subsidizing the economy. Germany came up with this idea, hey, why don't we pay people a bonus for going on vacation domestically? And that's just one sign that maybe governments are taking it a step too far. You may have heard a story this morning, and it's obviously not Germany, but in the Hamptons, there's some hotel, or you can rent the place for $400,000 a month. People want to go on vacation domestically. They want to go on vacation. They may have a budget to go on vacation for the summer, and obviously I'm talking the ones who have a job and can afford it, but they may have a budget to go on vacation, but they prefer to go local, and so the Hamptons are a prime beneficiary of that. And I'm talking here from the Bay Area. Lake Tahoe, in my view, is going to be a prime beneficiary from that, and other nearby vacation places like Carmel Valley or Monterey or whatever it is, right? You go locally and you're willing to pay up, and so that's going to be a relief to some of the Airbnbs there and hotels. Obviously, that's going to be not really uniform. There are plenty of Airbnbs that bought several apartments in places like New York City, and those are probably not going to benefit from that. That would be my guess. I mean, I'm speculating here, but the point here being is that governments are in a mood to spend a lot of money, and they'll spend money, and they're not necessarily going to spend it on the right places, because maybe, just maybe, they should listen to to the market forces. Then, other than that, what else is happening? Crude oil. Crude oil, West Texas. Remember the negative prices? Well, we currently have 32.40 on the screen. That's up 10% for the day, or $3. Brent crude is at 34.65. That's up $6. And so demand is picking back up, and there's a story out how fuel consumption is in China is at pre-crisis level almost. And some people are cautioning just a little bit on a few fronts, notably that they might be reluctant to take public transport, and so cars might be more in demand. Factories are certainly back up and running in China. The question is whether they're overproducing and we're going to have some sort of shock from stuffed inventories, because it's easy enough in China to direct state-owned enterprises to tell them, hey, you got to produce, but people got to buy the stuff at the end of the day. And if you look at some of the malls that have opened up in the US, there is certainly pent-up demand. But are we really going to go back to pre-crisis spending right away when you have about a quarter of the population out of a job? And since we've mostly the folks at the low end of the income spectrum have lost a job, odds are the lines you saw at Louis Vuitton and other luxury places are not the folks who lost a job, but others. And so we may see a rather uneven recovery. Now that said, we there is a there is obviously the government checks that have been coming for unemployment. They'll boost some spending on the consumer side, because the folks who don't have a job, they need the money because and they will spend the money. So that's going to be interesting to watch. Um, Overall, obviously, different places have taken very different approaches to this crisis. What is interesting is that the outcomes aren't all that radically different in many places. I mean, obviously, there are distinctions, but I think to a significant extent is because people listen to the news and then they act accordingly. So Florida is being highlighted as a place where the government has been very slow in responding, and yet they are their cases are not out of the ordinary that they have of the virus. And it appears to be, that's my interpretation, and I'm not a medical doctor, that Florida has a very large elderly population, and they listen to the news and they stay at home. They don't need a mandate to stay at home. And I'm not trying to make a value judgment as to whether they should have or could have or done this and that. The U.S. is a huge place, and it was almost destined to have a decentralized approach, and so and mistakes will have been made in local places. There's no doubt about that as well. All right, let me just see whether I got some other notes here for you that I wanted to share with you. I think I covered most of it. Um, Yes, so as I see here, the markets continue to move. The S&P is kind of taking a breather here after this initial euphoria. I mean, the Chair Powell came out, had an interview on 60 Minutes, and gave advice on when stadiums should reopen, and that was quoted by Bloomberg. I think, just as I'm not a medical doctor, we know that Chair Powell is not an expert on stadiums, and that's obviously the sort of sound bites people want to listen to. What's pretty clear is that we're not going to have a recovery to level where we were before quite an extended period, and it's still very open as to how much damage we're causing, how many defaults we're causing. We're starting to get headlines of bankruptcies and in some larger players that were weak to begin with. In the meantime, of course, you do have the subsidies to many places, and so. Um, if I'm not mistaken, the consumer is going to be reluctant for an extended period, and more importantly, um, behaviors are going to change, and so it's going to be an acceleration. Some people have said that Silicon Valley is going to kind of lose its edge here. It's possible. It's possible. Silicon Valley, if anything, has been kind of fostering this drive here to work from anywhere, but at the same time there's always more to any one center um, than than just the people. It's the entire infrastructure that's around, and there will be some changes there as well. Um, Commercial real estate. Will commercial real estate prices plunge as people don't need as much space anymore? Or if I look at some, especially in the financial districts, they're cramming people there in a very tight space. Um, well, maybe they need more office space, right? And so I think the jury is still out. I'm not trying to make a prediction here. On the residential side, people might want to move to the countryside more. There had been a flight from suburbia into the city. Maybe the trend is going to go into reverse. And I'm just throwing that out there that we just don't have a grip yet on the sort of things that will happen. What we do know is that on the sporting side, it's going to be slow, and also that, of course, educational institutions are struggling. They do need the revenue, and so the universities have to figure out a way to have people go back to campus for the most part, and some of the universities will go out of business. We all hear about the staggering price tags of the so-called elite universities, but there are many universities that are struggling to have students in the best of times, and of course this has been a major blow. Keeping up the kind of the campus infrastructure is expensive, aside from obviously the professors as well, and so we'll see a lot more in that. Goody. I'll leave it at that for now. Have a great week, and we will be in touch. Take care. Bye bye.